Hello, my name is Timothy Lee Rogers Sr., and I'm the creator of the Smart Money Manuscript. But Tim, what is the Smart Money Manuscript? The Smart Money Manuscript is your roadmap to financial freedom. Inside this powerful course designed to transform your financial future, I've meticulously condensed over 1,000 of my public YouTube videos into 40 highly efficient lessons that span just 2.5 hours. This course is strategically designed into 4 phases to help guide your learning in the most logical and effective way possible. Phase 1 lays the groundwork, covering essential financial literacy like budgeting, banking, and taxes. In Phase 2, you'll move beyond the basics, learning about brokerage accounts, figuring out how much you need for your own individual retirement. You learn about how to do fundamental research on companies, and you'll also learn how to conduct technical analysis by looking at stock charts. Phase 3 empowers you to build a robust portfolio and leverage your capital using advanced techniques like options and futures, and it also teaches you the importance of backtesting your strategies. Finally, Phase 4 takes a deep dive into the advanced ICT concepts, giving you a professional edge. Each lesson includes a short quiz to help solidify your understanding. By the end of this journey, you'll have the confidence and tool that you need to make intelligent investing decisions, manage your money without fear or ambiguity. So if you want to be a long-term buy and hold investor, if you want to be a swing trader, if you want to be a day trader, if you want to trade stocks, if you want to trade options, if you want to trade futures, the Smart Money Manuscript is for you for $69.99. Yes, $69.99 for all of this here. Good evening, everybody. Welcome back. For those that's pulling back up, I appreciate you for pulling back up and tuning back in. Why can't I see this stuff? All right. Maybe because I'm not sharing that. All right, I ain't gonna hold y'all up, man. We ain't gonna take too much time. We're gonna go ahead and get right into it. Okay, did I close the... No, I didn't. There it is. Wonder why they put them together. We're gonna go ahead and get right into it, man. We are on the last session for the educational portion. Oh, wait a minute. I keep forgetting. Everybody wasn't with us earlier. So, for those that's just joining us now or watching the replay, good evening. If this is your first time tuning in to Tim's Tidbits, allow me to say welcome. If it's not your first time tuning in to Tim's Tidbits, I still want to say welcome, but I want to give you a nice hearty. Well, thank you for always tuning in to Tim's Tidbits. If you don't know who I am, my name is Timothy Lee Rogers Sr., a.k.a. Aranya Grande. You see it on the shirt. You see it behind me. That just means big spot if you know hablo español. And this is the last lecture series, lecture video, if you will, for the Smart Money. For Facilitation February. Give it up for yourself for making it all the way through the end. All right. We're getting ready to do the Power of 3. If you don't know what Facilitation February was, if this is your first time tuning in, we was going through my Art of Reading Price Action playlist every night in the month of February, starting at 8 p.m. Eastern Standard Time, and watching the video that I made, and then doing a deep dive if Michael has taught anything new on that concept, giving us any further understanding of the concept, or if it was something that I just felt like I didn't explain very well back then because I got a better understanding of it now. So we're just going back through and having us a nice refresher training, if you will. A little trainer going on. This is our second session tonight. This is the last session lecture for the series. Today was the first tape reading session for the series. Tomorrow and Thursday, the tape reading sessions will be at 7 p.m. Eastern Standard Time, from 7 until 8, 7 p.m. to 8 p.m. Eastern Standard Time. And Wednesday and Friday, well, today, Wednesday and Friday, it's going to be at 9 a.m. Eastern Standard Time, from 9 to 10, giving everybody an opportunity to watch the price in real time and see if we can identify the signatures that we've been studying throughout the month in real time. Okay, if you work at night and you can't pull up for the evening tape reading and you can only pull up for the morning, or if you work in the morning and you can't pull up in the morning, so you got to pull up at night, that's why we're rotating between morning, evening, to give everybody an opportunity to look at the price in real time. Now, without further ado, we're gonna go ahead and get into it. At the end, I'll be opening up for questions for everybody. So if you're on YouTube, do me a favor, hit a like for the algorithm, and subscribe to the channel if you're not subscribed, and get your questions ready if you have any questions. If you inside the Zoom, get your questions ready if you got any questions to ask at the end. And now we're going to get into the power of 3, if I can share the right screen. Greetings, salutations, tech-tie, however you say it in your neck of the woods. I'd like to welcome you to another episode of Le Art of Reading Price Action. Again, welcome to another episode of The Art of Reading Price Action. And in this episode of Le Art of Reading Price Action, we will be discussing the power of 3. Yes, this is the final educational video in the Art of Reading Price Actions series. But fear not, I will still be on Al Gore's internet. The Art of Reading Price Action, the power of 3. Yes, 3. The power of 3, also known as accumulation, manipulation, and distribution. Yes, that's what the power of 3 is. Accumulation, manipulation, and distribution. Now, let's get into it. What we're going to be covering in this, ICT calls it modules, I call it a video. So we're covering the ICT power of 3, right? You got to remember, everything about ICT concepts has a specific criteria. It's just not every up close candle is going to be an ICT bullet bearish order block. Every down close candle that breaks up high and low is not going to be an ICT bearish breaker. It's got to fit the narrative, right? ICT power of 3, right? The importance of developing your anticipatory skills, right? Engineering liquidity in the market, neutralizing liquidity in the market, market making and pairing of orders, what the accumulation looks like in bull and bear conditions, what the manipulation looks like in bull and bear conditions, and what the distribution looks like in the bull and bear conditions. Now, that's everything that we will be covering in this module, if you will. Now, the power of 3 applies to everything. You can apply the power of 3 to everything. You can apply accumulation, manipulation, and distribution to everything. When I say everything, I mean every single candle. I mean every minute, every hour, every 4 hour, every day, every session, every week, every month, everything. You can attribute an accumulation, manipulation, and distribution to every aspect of price movement. Now, does that mean it's going to happen on every candle? No, it doesn't, because it's got to be a specific criteria that's met, just like all the other ICT concepts. But this here, this power of 3 is le bread and le butter. Now, the power of 3 concept, what's the specific criteria for that? The power of 3 concepts is looking for accumulation, that consolidation. You're looking for accumulation, then you're waiting for the manipulation. Then after you get the manipulation, then you're looking for a period of distribution. So you wait, you look for accumulation. Then once you get that accumulation, you got to wait for the manipulation. You got to wait for it to manipulate, right? And then once it manipulates, then you start looking to where can we distribute or offset or get out of these positions that we have gotten in, right? So you got to have a destination, right? An anticipatory reactionary point. All right. When you understand this concept, you will spend far less time at the charts. You won't be sitting at the charts all day long because you understand, okay, I only need to be trading during a specific time. So if you know, all right, I need to look for accumulation. Once I see the accumulation, I need to wait for the manipulation. And then once I wait for the manipulation, then I can start looking for where will this be distributed at, and then I can start looking for entries. So if it's just accumulating, it's just consolidating, I don't need to sit there watching it, right? You can set your alerts to say, hey, once price breaks this level, let me know so I'll know that it's manipulating, then I'll come back and look. Then once it start manipulating, you can set your alert, say, once price does this, let me know. And then I'll come back and start looking for my opportunities. You'll spend far less time sitting in front of the charts because I'm looking for accumulation. I'm waiting on manipulation. And then I'm looking for the periods of when it can go into the distribution phase, the periods and the levels, right? Get it? Got it? Good. Moving right along. Now, let's talk about candles. Well, these are bars, whatever you call them, but it's the same concept of a candle, but it's easier to see on the bars for some people. For me, it's easier to see on the candles, but the bars take away the guesswork, right? Because, on the left, you got the open, you got the body, and then on the right, you got the close, okay? So the opening price, right? The opening price on a candle is the initial value, right? It's the initial value prior to any kind of imbalance, right? Before any or anything, before any type of movement, this is the initial value prior to any kind of imbalance, okay? The closing price, that's super important too. It's the ending value after the imbalance take place, right? So you got the opening price before any type of imbalance, right? And then you get a move to one side or another, up, down, and then you get a closing price, right? That's the last agreed upon price for this asset at that time period, right? And then the body is the range of expansion. This is a dynamic price imbalance, meaning it's moving. It's when you open, it's moving, right? And then when you close, you say, okay, there's the range expansion, because you don't know until it closes. You don't know how big that range expansion is going to be, right? It's dynamic. It's moving. It's ever moving until that candle closes. That time period closes. Then boom, you got your range expansion, right? Now, those are the main aspects of a candle's anatomy, if you will, right? But it's very important that you develop your anticipatory skills so that when you're anticipating the market to be bullish or bearish, you know what to look for in reference to the power of 3. So when you get the opening price, right? When you get the opening price in power of 3, what are you looking for? You're looking for that accumulation, right? And you want accumulation to happen as near as possible to your opening price. In this case, this is a up close candle, right? So when price opens, you want to see that accumulation happening as near as possible to the opening price of that candle, of that session, of that day, of the anything that you're watching. You want to see that accumulation happening as near as possible to that opening price. Then once you see that accumulation, you want to wait for the manipulation. So if you're bullish, right, and you have your anticipatory skills heightened, you know that you want to see the market manipulate down first. You want to. I'm going to hit pause right there real quick. Don't want to gloss over this. Want you to understand the importance of understanding that price is not going to always give you the power of 3 for every session, every candle, every day, right? Price may very well give you accumulation in the London, manipulation in the New York morning, and then distribution in the Asian. It may, because price is fractal. So you're not gonna look for, okay, we're in the New York session, so I got to see accumulation in the New York session. The accumulation might be done happened already, right? If you talk about the entire session, and then the entire session may be the accumulation. The entire session may be the manipulation, right? It just depends on the time frame you're watching, how big of a move you're watching. If you're watching something on a daily time frame, it may take you several days to manipulate. If you're watching something on a 1 minute time frame, it may take you 30 seconds to manipulate. It may take you 10 seconds to accumulate, right? Price and time and price is fractal. So don't think you got to see accumulation at the 6 o'clock open. You got to see accumulation at the midnight open. You got to see accumulation at the 9:30 open, right? Price is fractal. So you may see accumulation at 8:30 and you may see manipulation at 9:30, right? The 9:30 can't, like today, 9:30 candle open up, boom, we went straight into manipulation, right? And how do we know when it's in manipulation? Because when we was reading the price, we said, hey, look, we just went up to the new week opening gap and we came back down and broke that low that was created. That's a bearish Judas swing. That's manipulation. That's in line with the sell program that we've been in overnight. Okay. Carry on. See the manipulation down happen first if you're bullish, because your anticipatory skills are on 10. They're heightened. So, once you see accumulation, you're not just going to sit there and watch the market all day. You can set an alert so that and say, hey, when price comes down and attacks this specific low, or when price comes down to this specific higher time frame PD array, when price comes here, send me an alert. Then I'll know, hey, let me go see if the manipulation is happening down here. Yes, there's my manipulation. Now, I can start to look for areas where distribution can happen. Where? At a prior high. Look up and to the left, to the left, to the left. Everything you need to know is always to the left. Just look up and to the left and say, hey, I can distribute my long positions that I get in somewhere down here after this manipulation up here above this high. So now you got your plan in place, and then you know how to attack the market. Now, speaking of attacking the market, IPTA engineers liquidity in a couple ways. With the consolidation, it's allowing, or the accumulation, should I say, it's allowing buy stops and sell stops to accumulate or build above and below the market. Now, that's not the only way that it engineers liquidity, right? Because we talk about engineering liquidity in the market now. That's not the only way it engineers liquidity. Okay, you have turtle soup traders who will buy sell stops. They'll buy below old lows, right? These are the ones with their anticipatory skills heightened. They know that we are in a bullish condition right now. So they're getting in, or they're getting in with the smart money. They're buying below old lows during this manipulation phase. Also, another way if the engineers liquidity in the market is they're forcing breakout traders into the market. Now, the breakout traders are the ones who their anticipatory skills are a little skewed, and during this bullish condition, they think that it's bearish and they're looking to break out, right? and sell weakness. Any breakdown, they look for an opportunity to sell weakness and continue down. Now, they're being forced into the market just to be liquidity for smart money. The sell stops down here aren't just the breakout traders. They're for buyers that's already in the market in a good position, and they have sell stops resting below lows, and IPTA attacks that during this manipulation phase. Now, speaking of attacking those sell stops during this manipulation phase, let's move on to neutralizing liquidity in the market, right? Neutralizing liquidity in the market. Remember when I said there are buyers that were in very good positions already and they had sell stops resting below old lows? Now, they have just been neutralized on this manipulation leg down. They have been forced out of the market, forced to sell it cheaper than they really wanted. They want to sell up here somewhere, but they were neutralized out of the market. And now they are afraid to get back in because they were like, oh my goodness, I was wrong. The market is dropping. And then the breakout traders are like, oh my goodness, I was right. The market is dropping. And then, dun, 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 burn. They are both liquidity for smart money to pair their orders with their buying interest. All right. So now the smart money wants to buy below old lows. And so the breakout artists that want to sell and the buyers that was already in good positions, they now become liquidity for smart money. And they are paired with the smart money's buying interest, meaning they're buying those sell stops down here below old lows during this manipulation phase so that they can find later come back up and distribute or offset their long positions above old highs. And again, now they're going up there and attacking buy stops, and they're pairing these long entry, like the liquidity now wants to buy, and IPTA is now long, so their exit is going to be what? A sell. And who do you sell to? A buyer. So now IPTA is selling or pairing their long exit with pending buyer's interest. It's a dirty, dirty game. Now, before we get into some examples, let's just go through and look at it on the bearish side. It's the same thing, so we're going to go through relatively quick. Now, again, accumulation. At this point, you got your anticipatory skills heightened, so you're expecting us to be in bearish conditions. So you're looking for accumulation, aka consolidation, near the opening price, very near the opening price. The nearer, the better. Right? You got your accumulations. This is where they're letting the short positions build up. Right? They're accumulating their short positions. They're just letting them build up because they want to get short. Right? They want to get short. Now, then you expect the manipulation up. You want to see it go up and manipulate old highs. You want to see it go up and engineer that liquidity, neutralize that liquidity. Everything it did on the bullish side, it's the same thing on the bearish side. You're going up. Breakout traders have buy stops sitting here because they want to buy strength and get long. You know, short sellers who was already in the market in good positions, they're now being neutralized. Right, the liquidity is they're being neutralized. They're neutralizing the short liquidity who was in the market in good. All of that, the same thing is happening. You're going up there and you're attacking those buy stops, because if a short seller is already in the market, they have a protective stop, which is a buy stop, because they sold and they have a buy stop, and they manipulate them out. They pair the orders the same way it did with the bullish. Now they have buy stops that's being paired with IPTA's short interest. Since they have buy stops, right, IPTA is going to sell because they're buying. IPTA's going to sell, right? Boom. IPTA sells. It gets a net short position, and once it neutralizes all of the breakout artists and all the short sellers that was already in the market, then IPTA will look for an area to distribute their short positions below old lows, where IPTA is going to buy it back. Right? They're going to buy it back a lot cheaper than they sold it. They're pairing their short exit with willing sellers. They're going down there and they're buying it back below lows. Just like they sold it above highs, they're buying it back below lows. Now, let's get into some examples of what the accumulation, manipulation, and distribution looks like for bullish conditions. Right here, if you look here in this green shaded area, I know it's kind of hard to see, but right there around that blue line represents the opening price for whatever this fractal is. It matters not what time frame it is, how much time it is, it's just a fractal, right? So the blue line represents the opening price. This green area right here is accumulation, aka consolidation, is happening at or near the opening price. Okay, this red area down here, this is the manipulation phase. If, as you notice, it's going down below the opening price, down below old lows over here. So this is the manipulation phase. And then the distribution phase is over here in this blue area, right? Because as you go up above these highs over here, right, you're getting above these highs and these highs over here, right? There's some highs right over there. As you get up above there, the market starts to distribute, right? Starts to distribute these long positions that they acquired down here. They're selling it at a very high price. They bought it at a low price and they're selling it at, so they're distributing it, and price starts to pull back a little bit because a lot of sales are coming to the market, and then this other blue line represents the close. Now, I want to pause it there and go back real quick and point out how, when I was saying you don't want to look for it on every candle, every session, it can happen over a span of time, right? And now think about this. If you pay attention here, I don't know how well you can see it, but there's a OTE fib on this fractal. So now you're seeing the power of 3 be utilized for an optimal trade entry, because you got the accumulation, the manipulation when it's dropping down into the OTE, right? That's your 62, that's your 70, that's your 79, right? When you're dropping down into the OTE, and then price rallies up and you see your different targets as you're going through, right? So you got the OTE, this is the OTE setup being, you see the power 3 being used in conjunction with that OTE. So it's not just about, oh, let me look for it at the session, oh, let me look at this candle. The power of 3 can be applied to a lot of different things because time and price is fractal, and you can utilize the power of 3 to your advantage for things like entering on this OTE setup. Because why is that? Because when you look at this area of accumulation over here, this reaccumulation, we're on the right side of a market maker buy model, right? The price engine model that's happening here is offset accumulation, because you consolidate, you engage sell side, and then you come back up. So that's offset accumulation right there, right? You got offset accumulation, you got the power of 3, and you got an OTE entry playing out all right here, right? Get it? Got it? Good. Carry on. A lot of sales are coming to the market, and then this other blue line represents the close. Now, for the bearish, let's look at a bearish condition. Pretty much the same thing, just in reverse. The green area with the blue line there, the blue line represents the open. Right? You have your accumulation phase. Right? You have your manipulation phase where you trade up above highs. Some really old highs over here. Trade up above highs. And this is your manipulation phase. And then you drop down, and there's your distribution phase where you come down below old lows, right? We're down here below old lows, and then the market starts to distribute or offset these short positions they got up here, down here to willing sellers. And as you see, a little retracement comes in because some heavy buying is coming into the market, offsetting all of these short positions that they got in up here. And then the blue line represents the closing price. So there's your accumulation, your manipulation, and your distribution down here for your bearish example. Like I say, you can apply the power of 3 to everything, but let's look and see how it looks over a day range. As you see here, from the Asian going into the London kill zone, we got our accumulation phase. And during the London, we get our manipulation phase going into the New York. And then during the New York AM and PM, we get our distribution phase here above old highs. Okay, so you got your accumulation, manipulation, and then distribution. And as you see, you're not looking for accumulation, manipulation, distribution in the Asian, accumulation, manipulation in the London, accumulation. No, you're looking for accumulation. You're waiting for the manipulation, and then you look for opportunity for distribution. Right. Once you get the manipulation here in the London, right, and then we come up and get this break above this hottest breaking structure. Now you see, oh, I got an opportunity for a retracement, and I could distribute my long position above these highs over here. Retrace back, get long, and distribute. Now, smart money is getting long down here during this manipulation below these old lows. And if you're a turtle soup trader, you're buying these old lows. And then, again, you know, if it's bearish, it's just the reverse. Now, let's get into our favorite part, the homework. I want you to go back through price, and I want you to section off fractals of price one day at a time. You pick the time frame, just pick a all right. We see the homework. Like I always say, you can use any instrument you choose to use. I choose to do the NQ. Excuse me, this is back when I was trading the ES. That's why I got the ES on the chart. It works with any instrument. It can be a stock. It can be a index. It can be a futures instrument. If it has price, the concepts work. So that brings us to the end of the lecture parts of Facilitation February. Is there or are there any questions from the gang? Do we have any questions from the gang? Do we have any questions from YouTube?
Are we looking for the power of 3 inside the market maker model? I know you said don't look for it, but
the power of 3 is the market maker model is the power of 3. The whole market maker model is the power of 3. The power of 3 is accumulation, manipulation, and distribution. Yep. So the market maker model in its totality is the power of 3.
Got it. Yep. And now as you say that, I remember how you described the market maker model. Yep.
Yeah. Because when you start with the market maker model, you start with an initial consolidation. So if price is in a buy program, meaning that we're going up, y'all know I'm a visual learner, so I don't know why that just automatically goes to that screen when I hit that. You know what? That's why I keep doing that, because that's it's the same. The shortcut for Zoom is the same shortcut for Streamlab OBS. That's what's been happening. All right, got it. All right, so I'm just gonna come in here. Can everybody see my screen? Zoom, can y'all see my screen?
Yes.
Okay. All right, and I can see it on YouTube. All right. So, what was I talking about? What?
Market maker model being the power of three.
Okay, yeah. All right, so I'm just gonna squeeze this up and uh we just come here. All right, we just gonna come here, right here. All right, and we're gonna look at this little fractal of price here in the form of a market maker model, right there. Okay, and so when we're watching this right here in the form of a market maker model, right? So we're gonna, God dog it, come here. Okay, let's come here. All right, so here we are. This is our initial consolidation right there, right? That's our initial consolidation. Right. This is our initial consolidation right there. Right? Now, and then this here, come down here, right? This right here is our smart money reversal. Right, I'll just type that. Then I'll just put this as IC. Right? And then just gonna come right over here. And I'm just gonna call this right here. We're just gonna put term here for terminus, meaning we reached our terminus, like reached our destination. Right? And then, so I'm just gonna squeeze it up like this so we can really see what a goings on, right? So now, as we're looking at this, this is our initial consolidation right here. At this point in time, right? At this point in time, right here, smart money is bullish right here at this time, right? You may or may not know that, but right here at this point in time, smart money is bullish. So when smart money is bullish, okay, right, so the sentiment equals bullish, right? And since the sentiment is bullish, right, the but the manipulation equals sell side, right? Since the sentiment is bullish, the manipulation equals sell side, right? Because right here at our initial consolidation, sentiment is bullish, so we want to see it to manipulate sell side, right? In the terms of the power of three, right? Power of three, right? You can go ahead and eat it. I ate something else. I left it in there for you. Yeah. Right. Accumulation, manipulation, and distribution. Right? That's our power of three. Okay. And then, right? That's our power of three. So here we got our niche consolidation. Our niche consolidation is that accumulation. All right. All right. All right. That niche consolidation is that accumulation. All right. Then we come down here, And all of this here for a market maker buy model, the sell side of the curve, right? The sell side of the curve is our manipulation, right? So let me do it like this right here. The wholesale side of the curve is our manipulation.
How will we know smart money is bullish at the accumulation phase?
That's why I just said you may or may not know that.
Okay.
I would say you may or may not know that. The way Michael teach, and if you remember from the market maker model video, I said most of us realize we're on the right side of the market maker. Most of us realize price is bullish once we get to the right side of the market maker model.
Yeah.
That's what Michael teaches us, to trade it on this side of the model, because you have to be really in tune and very advanced to be able to trade on the sell side of the model if price is bullish, because you don't know how far down it's going to draw to if price is bullish. So, but here's the gag. When you realize you're in a market maker sell model, right? In essence, you are essentially trading the left side of a market maker buy model, right? But you're not trading it as a market maker buy model. You're just trading it as a market maker sell model to a specific draw on liquidity, right? So at this point in time, you're not worrying about is smart money bullish right here, because you're trading this to come to a specific target over here, because you're in tune with the algorithm, because you say, okay, we're on the right side of a market maker sell model, we're in a sell program, so I'm selling to a very specific target, but I'm not trying to pick the bottom to turn back around. I'm going to wait until smart money gives me a sign to let me know that, yes, now we're on the right side of a market maker buy model. That's why I say you may or may not know that price is bullish right here, because if it depends on the fractal of price you're watching, because if you're watching a daily time frame, and now you know that you have come down to a daily anticipatory reactionary point, right? And you start getting this consolidation right here. Now you know that price is bullish. And when we come down and take out this daily low, you're anticipating price to turn around. So now you're already watching this as a potential initial consolidation as you go into that area where you're anticipating price to turn around. That's why I said you may or may not know. So you're not going to always know that's bullish, but sometime you will know based off of what's going on the higher time frame and where we are in price, in order flow. You understand what I'm saying?
I got you.
All right. So this whole left side of the market maker model is the manipulation. It don't matter if it's a sell curve or a buy curve, right? The whole left side is the manipulation. All right. And then the right side is your distribution, right? The distribution phase of the power of 3, right? All the way up to your terminus. I spelled it dead wrong. Hey, y'all just got me out here. Got me out here. Wrong spelling. Big wrong spelling. All right. And so the whole market maker model in itself is the power of 3. It's just accumulation, manipulation, and distribution, but it has a very specific criteria of how the market maker models play out. Right. We talked about the initial consolidation, the distribution, the accumulation, second stage reaccumulation, going back up to your terminus. We talked about reclaiming order blocks, right? Setting bullish order blocks on the sell side of the curve, reclaiming them bullish order blocks on the right side of the curve, on the buy side of the curve, you know, stuff like it. It's very specific criteria how you can interact with this market maker buy model, but it's all a part of the power of three, right? And then since price is fractal, right, you can go into your area of accumulation here, right? We get our smart money reversal there, and then we get into this area of accumulation right there, right? We can look at this whole thing here as accumulation before moving out, right? If you look at this whole thing, you can say this entire thing is accumulation. We expand up, then we retrace down and go up. So we can say this entire thing is reaccumulation, right? But then we can come here and say, oh, we got offset accumulation, right? Because we consolidate, drop below a low, expand back up, trade back down, and then expand up, right? So every price is fractal. So it depends on the lower you go down in like aspect of time, right? You're going to see all different price engines, all different models and everything happening. And then we talk about accumulation, manipulation, and distribution, right? Over here we come to accumulation, manipulation, and distribution, right? Come here, we got consolidation, expansion, reversal, retracement, delivery, right? All of the different concepts, you can see them inside price, but we're still inside this one market maker buy model with accumulation, manipulation, and distribution. All right. I know I threw in some little extra stuff outside of what Joe was talking about, but I just wanted to illustrate how the concepts can't be detached from one another. All of the concepts is talking about the same thing. Everything about ICT is talking about the power of three, the accumulation, manipulation, and distribution. That's how IPTA delivers price, by accumulating buy and sell stops, by manipulating buy side and sell side, and by distributing or offsetting above highs or below lows. All right. Anything else from anybody? All righty. With that,
Appreciate you, Tim.
oh man, ain't now who that? Seawalk?
Yeah, that was good there.
All right. I'm glad y'all found some value in it. Was I not sharing my screen with y'all on Zoom that time? Hopefully y'all can
Well, when you had a chart up,
yeah.
yeah, you were showing it.
Oh, okay. No, it just looked like I wasn't. Maybe it was just maybe you were seeing it through the thing that Lump was complaining about is blurry. Maybe you were seeing it through just my little square instead of through the full screen. I don't know. Yeah, that's it, man. If ain't nobody got, I forgot to shout out Rhonda tonight, man. I feel bad. I forgot to shout Rhonda out tonight. Shout out Rhonda Green. Go to rhondagreen.com. This is one of her books she wrote. 40 Questions Before a First Date. Then she got another one that I had purchased from her called Before the Butterflies. The Before the Butterflies is a digital download, and 40 Questions Before the First Date is a paperback real book. I hate to say a real book, but a tangible book. All right, rhondagreen.com. Go check out. You know what I'm saying? I bought it. I already told I ain't gonna read it. I ain't a reader. I don't be reading books. Only book I read is the Bible, and I try to listen to that most of the time. I like to watch videos. I'm a visual learner. You know what I'm saying? I like to watch videos and listen to audiobooks. Tomorrow is the second day of tape reading for Facilitation February. It's going to be at 7 p.m. Eastern Standard Time right here on the U of the Tubes in the Gang. Y'all will be inside the Zoom link. Wednesday will be 9 a.m. Eastern Standard Time for the tape reading from 9 to 10. Thursday will be 7 p.m. to 8 p.m. again. Then we'll wrap it up on Friday at 9 a.m. Eastern Standard Time. It will not be a signal service. It will not be a trade room. I will not be trading in front of you. I will not be telling you when to enter. I will not be telling you when to exit. We are just studying the price to see if we can identify the signatures in real time. It's not about being right. It's not about being wrong. It's about studying price and seeing what price offers. Okay? Okay. Now, with that, we're going to go ahead and call it. It's 8:53. It's late. Y'all give it up for y'allself. Wait, got to share my sound again with Zoom. Y'all give it up for yourself for taking the time to, for investing time in yourself. That's what I'm trying to say. I'm trying to move stuff around and talk at the same time. Y'all know I can't walk and chew gum at the same time. Drop one of Clue's bomb for the gang. It's always supporting you, boy. Drop one of Clue's bomb for everybody on YouTube. If you're not part of the gang, right? And until the next time I decide to get on Al Gore's internet and share my thoughts on this thing that we call price action. You know what? The price action recap. Since we've been doing the facilitation February, I haven't been doing the price action recap. So once we finish facilitation February, it's Friday. Starting next week on Monday, we'll start doing the price action recap again at 6 p.m. Eastern Standard Time here on the U of the Tubes channel. All right. It's your boy, Timothy Lee Rogers Sr., a.k.a. Aranya Grande. You see it on the shirt. You see it behind me. Just mean big spot if you don't hablo español. And on the way out the door, do me a favor. Hit the like button. If you ain't subscribed to the channel, please subscribe. Y'all be safe behind these trading streets, man. Gone.